Ahead of the monetary policy decision tomorrow, the Naira rallied against the US dollar at the interbank foreign exchange market today, closing at 159 Naira 40 kobo to the greenback after weakening to as much as 164 Naira just a few weeks ago. Now, meanwhile, the cost of lending among banks was broadly lower as a flood of liquidity is expected to hit the market this week. Nnamdi Wizu, Assistant Vice President, Head Fixed Income at Citibank, joins me now to look at Nigeria's money market space. Thank you so much, Nnamdi, for joining us. Now, the Naira has been in the spotlight for a few weeks now. We've seen that weakening, we've seen pressure. We've heard that supply side from the foreign investors has been a bit weak because the broader events in the US Fed taper or not to taper, but it looks like we've seen a bit of stability now. So I'm wondering, do you think this is a result of the interventions we've seen by the CBN at the market, or do you think we're seeing a gradual inflow from this where we saw the supply side pressure?
I think it's a mix of both. But the intervention by the central bank has been pretty effective, and we saw them do that about 2 weeks ago, very aggressive in the market, which has added a lot of support to the FX market. And at the same time, with the decision of the FOMC to postpone the tapering, we've also seen quite a bit of inflows coming into the country, which has added support to the currency right now. So if you look at it since the FOMC decision till date, we've seen the Naira gain, about 2% or thereabouts, strengthen by about 2%, which is a pretty big move.
So some might describe that as a lucky escape for the Naira because, concerning the FOMC, if the US Fed had decided to reduce its the amount of bond they issue every month to from around 85 billion to 15 or 20 billion, as the financial markets were expecting, what would have been the fate of the Naira?
Well, we might have seen a slight depreciation of the currency, but I think the central bank has been pretty consistent in the last few months, where they've said they're ready to defend the currency. We've seen them do that time and time again.
But we saw those interventions being short-lived.
Well, prior to the FOMC decision, the Naira had already gained from about 164. It had gone down to roughly about mid-162 levels, which was mainly due also to the FX intervention. If you compare the Nigerian currency to a lot of other emerging markets or frontier markets, you would see that most of them have lost, 15 to 20%, while the Naira has basically just lost about, 2-3% prior to the FOMC decision. So I think the central bank has done a pretty good job, and we expect them to continue to support the currency.
Okay, talking about supporting the currency, that's one of the issues that will be discussed today. The meeting began today, and a decision will be taken tomorrow. Now, while we're not expecting them to tamper with the headline MPR rate, we might see one or two, hopefully, we don't know how it will go, the policies to support the Naira. What are your expectations?
Well, I think that we might not see so much of a focus on the currency for now. Reason being that, the Naira has strengthened. We're back to 159 levels, which was basically about where we were, post the FOMC. So
you see that being sustainable?
I think worst case, maybe even if it depreciates, maybe we'll get to mid-160s or 161 levels thereabouts, which still isn't bad in comparison to the other emerging market currencies, really. So I don't expect much to happen really at the MPC. Okay,
so your outlook for the Naira is largely positive?
Definitely positive.
Okay, let's talk about the fixed income market. And now we did see the market also spooked, during the FOMC, waiting for the outcome of the Fed meeting. Now, we've seen strong demand from PFAs in the last couple of weeks, but talking to one or two traders, I was told that there seems to be a gradual inflow of funds back into the market because foreign offshore investors seem to be more relaxed now. But they're not expecting this demand to be strong enough to push yields below 13%, which they've been for a while.
13% has been some sort of psychological barrier for the last, I would say, 2 months. Once the yields get to 13%, we see a bit of a bounce and the yields go back up again. But I think the dynamics are changing. FOMC has, we've had the FOMC tapering hanging over us for quite a while. Now that has been postponed indefinitely. No one is sure really when it's going to kick off again. And based on that, I expect we've already started seeing a bit of demand coming into the country again. If you look at the way the currency had appreciated since the FOMC decision, you can tell that people are beginning to get pretty confident on Nigerian fixed income space again, and they're ready to invest again.
So what, in terms of the trend for the yields, what could we be looking at? 13, 14, what could be like a barrier, technical ceiling as well?
Well, we've had a band basically roughly between 13.1 and 13.7, and we've been there for a couple of months. Right now we're back at 13.1 again, But like I said, things have changed a bit. We don't have the FOMC hanging over us in the short term. That might happen, what, 2, 3, 4 months down the line. But for now, I think we might see more action on the T-bill space rather than the bond space. But for the bonds, I expect us to hover around 13% levels. If we break that barrier, then I mean we could be headed for the mid 12% levels. But I mean we have to wait and see if that 13% floor, that 30% support will actually be breached in the next few days. Okay,
let's talk about the interbank market. We saw the cost of lending among banks spiking last week, and the week before that we saw core money going to as high as over 55%, multi-year highs, or perhaps the highest the market has ever seen. But we've seen rates coming down significantly. Would that be a combination of the inflows we saw perhaps from the FAC, and what's your outlook for the market going forward?
Well, part of the reason why we had a spike was due to the FX intervention and the fact that people can't really access the CBN window during the FX intervention period. And also the fact that we also had a CRR debit, which happened early in September. So the combination of both factors led to a spike in basically the interbank rates. Now that we've seen things normalize a bit, the intervention has reduced. We expect to see rates stabilize roughly maybe about 14–15% levels, in the short term. So and we have quite a few maturities. We have FAC coming in. We have OMO maturities this week and next week. That should add more liquidity to the system.
So that cycle will continue where bills mature, liquidity comes into the market, CBN comes, mops it up, and then
We think so. We know. I mean, the CBN would have had a bit of concern with the fact that they were issuing OMO bills to mop up liquidity aggressively, but with the 50% CRL, quite a lot of liquidity got taken out of the system. And I think we expect to see them active in OMO space when there's a lot of liquidity in the system. So FAC comes in, we also see OMO maturities. It's possible that you might see an OMO auction.
Now, how much of all of that benefited the net places at the market, and do you think perhaps the net takers now perhaps even a sigh of relief?
Definitely. I mean, from 55% down to 14%, everybody will have a sigh of relief. But I think that I think they're happy basically with rates stabilizing about 14–15. I also think the central bank will also be happy, because the truth about it is that nobody likes that volatility where you have rates going from 14 to 55 and then coming back down to 14 again. Too much volatility, not good for the markets. So I think that rates stabilizing about 14–15% levels would be good.
No chance of that happening in the near future? We don't know how the MPC space or the monetary space is going to play out, but do you think is that something that the market is still at risk of?
Well, the risk will always be there as long as we're an economy dependent on FAC coming in for liquidity. That risk always exists. We don't expect the MPC to tighten further, but we have seen some surprises, especially at the last MPC where they introduced the 50% CRR. We don't expect anything to happen, but if there's another surprise, then it's possible that you might see rates spiking again in the bank market.
Now, we might see the MPC digging deeper into its toolbox. For you, if we do see another surprise, where could it likely come from? Was it tinkering with the CRR? General consensus is that there won't be any tinkering with the headline rates.
Yeah, I think definitely not the headline rates. If they decide to tinker further, then maybe the general CRR, maybe raise it up 100, 200 basis points, but I don't expect that to happen. But if they were to try and tighten further, I think that's most probably where you go. It's been a more effective tool.
Even CRR, the economy, in a way, the broader economy has been suffering in terms of
which is why I don't expect anything to happen. But if they were to tinker with CRR, I would expect it to be, raising the general CRR by maybe worst case by 100 basis points. But we really don't expect anything to happen. I think that it's been just about a month since they really started implementing the 50% CRR, and they would rather want to wait and see how it plays out,
before taking anything more drastic.
Before taking anything more drastic. So we should be looking more towards the next MPC meeting in November, I believe.